I think a lot of us were pretty excited here for PayPal's earnings, which is down 4% after hours after reporting. So I'd like to take a look at these earnings and see what's going on. This is a company I was pretty excited. Ooh, now down only 2%. So again, we're in an active after hours trading window. So I'd like to see. The earnings call is going on right now. I'm very interested to see what happens to this pricing during the making of this. But it's definitely one I was very interested in because they seek to benefit from the current environment. So PayPal, on a non-GAAP perspective, missed by 8 cents. 66 cents. GAAP EPS of only 7 cents, missed by 28 cents. That's kind of an ugly miss in terms of profitability, all things considered. I'm glad that they're making profit, right? But the valuation of this company obviously sinks down if we talk about that big EPS miss. Revenue up 12% year over year to 4.62 billion. Missed by 100 million on that as well. So definitely interesting to see how they ended up finding a negative on that aspect. It's hard to say because they're really a company that should be benefiting quite a bit from this. To see misses from this it's questionable. But again, one thing that could be mentioned is there can be benefit down the road too. If we talk about next quarter is probably going to get a bigger impact than what you see in this quarter. And as far as the future is concerned, just being 100% honest, if we talk about the future of business, PayPal might be more involved. E-commerce is going to play a bigger part, and PayPal can be a big part of that if we're talking about future-proof. This whole thing has kind of just sent us into the future a few years beyond where we already were, as we're kind of forcing people to go online. So, PayPal is down in after hours. For like say, 237 million provision for a credit loss reserves due to deteriorating macro forecast. Scary stuff. Nothing too crazy here. Revenue, under the estimate by 100 million, up 12% year over year. Quarter one net new active accounts of 20.2 million, includes 10.2 million active accounts added upon the closing of Honey. So those went right into PayPal's numbers there, which is interesting for them. So 9.3 million in quarter four, but again, that's all because these 10.2 that really changed from that. So all things considered, they would be sitting right around the 10 million mark. So it would have been an increase of 700 million regardless in terms of, or 700,000 I should say. So nothing too crazy quarter over quarter for sure. So they made there were 3.26 million payment transactions versus 3.46 in quarter four. Not a shocker. Quarter four people, we're talking about over the Christmas quarter, stuff like that. People are buying a lot more stuff, so PayPal's a lot more used. Nothing too shocking there, but you would have expected a little bit higher demand. Next quarter, you probably will see quite a bit more demand. Quarter one total payment volume, or TPV as they'll probably shorten it to, of 191 billion, up 18% year over year, as merchant services volume excluding P2P rose 15%, and Venmo volume increased 48% to more than 31 billion. Quarter one cross-border trade total payment volume of 32 billion, up 9% year over year as well, and they withdrew their guidance. They withdrew full year guidance at least. For quarter two, they're expecting around 50% FX neutral, non-GAAP growth of 15 to 20% in EPS. So nothing too crazy there. So what are we going to see as far as the future for this company? Well, let's give some expectations as far as what they're going to highlight here. Accelerating April business trends driving strong Q2 outlook. Again, they're expecting big, and I mentioned this too. They really probably only saw a few weeks impacted as far as this quarter is concerned. So next quarter is going to be a lot more massive of a quarter. They've got April and May in there. Going to be big for them. So in April, they grew revenue 17%, not bad, and 7.4 million net new active accounts added in April, growing 135%. Yeah, that's right. And it's not a shocker. All these businesses are forced online. I mean, a lot more people are forced to shop on e-commerce platforms, and PayPal is a very good proponent in that. I mean, they're right there in the forefront of everyone. that's massive. So I think next quarter is going to be big for them, and that's what I'm looking for. And I think investors they maybe thought they were going to see a little bit more impact this quarter than they did. I mean, from the start, I already told you this quarter probably isn't the quarter for them. It's going to be next quarter. Nothing too crazy here. Net revenues, you obviously saw 12% income. Operating income did drop 23%, though. EPS dropped 87% year over year. That is what I would call not beautiful. I think that goes without saying. But total active accounts, you do see good growth in terms of this. These charts are beautiful little charts. Total payment volume, definitely good year over year. And you see positive growth. And if you looked at this chart expanded, if they didn't just include the past 5 quarters, you would see, overall Q4 is going to be bigger than the other quarters because of more volume just during then. Net revenues, you saw an increase year over year. But one thing you need to consider is that GAAP EPS line looks ugly. Obviously, it looks very ugly, all things considered. Just not looking good. It's against a 56 cent last year in this quarter. So, and operating cash flow, though, you did see a big bump in operating cash flow and free cash flow. So we'll look at that on the balance sheet, see what the heck is going on there. So, they also repurchased approximately 7.5 million shares of common stock, and that goes into a little bit. So, from their operating highlights, they saw double-digit customer growth driving increased engagement. They say double-digit, but they're gonna flaunt these 20 million net new accounts, but that was because of their acquisition of Honey, which is a web browser thing, pretty much finds coupons for you. So that's where they got those active accounts from. Now they added to their total, so it looks like they doubled, but they didn't double over, all things considered. So they have 3.3 billion payment transactions, up 50%. Approximately 1.2 billion payment transactions in April, so 20%. Massive stuff. 191 billion total payment volume, as we saw. Nothing crazy. From that balance sheet, we will certainly look into that. But those business trends in April, as you see, showed massive promise. April was really the biggest month for them right now. Total payment volume increased, net revenues increased, and net new active accounts increased significantly. And then talk about their impacts to help the current situation going on, which is exciting for them. The only other thing I would like to look at here is going to be this balance sheet perspective. March 31st, as of the end of the quarter. Again, this isn't including April. That's what I need to mention. This quarter does not include April. So next quarter should be very good for them, all things considered. Current assets right now, cash and cash equivalents, they've got $7.8 billion, $7.8 billion going on with them. Total current assets of 38.1 versus 38.4 in the previous quarter. Not really a big change there. Total assets in general, though, did rise to 54 billion versus a 51 billion number. Nice. But from a total current liabilities, so really, we'll just look at the total liabilities in general. Total liabilities of 38 billion versus 34 billion last quarter as well. So a big increase in terms of total liabilities as well. Overall, you see right around a $16 billion difference between more assets than they have than liabilities. But it's not a beautiful, it's not, I don't know. It's hard to say. It's not a beautiful balance sheet, all things considered. It's not bad. They have a lot of cash extra. But it looks good when you consider about the fact that this is a company with obviously a positive EPS line, as we saw. Valuation on this company after this dip, still right around 2%. Valuation's going to be, clicked on the wrong thing because that's what I always do. Valuation on this, probably going to be sitting right around the 60-something PE ratio, right around the 60s. But that's not the most exciting valuation for a time like this. But if you think about the other companies that are trading at absolutely absurd values, what the heck did I just say? Absolutely absurd values. PayPal seems relatively fairly priced compared to them somehow. because all things considered, everyone else is getting priced beyond this world. PE ratio is non-existent for them. They're not even making profit, yet they're getting valued higher than PayPal is. So I think you could argue that that PayPal is making a good push in terms of what they deserve for a share price. It's not one I'm really going to get involved with because that EPS line kind of doesn't feel good. If you're PayPal, it's not a good looking EPS line. Not saying that they won't have a good quarter next quarter. They will have a fantastic quarter in terms of revenue next quarter. Profit-wise, I'd like to see that they could continue that profit during this time as well. Hopefully that they don't have to fold any sort of, lay off anyone for this. They shouldn't have to. I mean, they're seeing increased demand big time. So hopefully EPS line increases the next quarter, and maybe we'll see where we're at with this stock. But I'm not too excited for the stock. Really short term, I think really next quarter is going to be massive, and I want to look at next quarter. So really hope you enjoyed.